Hi, folks. Dan Bird here with the Daily Scan from breakpointtrading.net. I'm doing this a little early today. It's about 2:30 Eastern Time. I've got things I got to do tonight, so I'm doing it before the market closes. But I think we can probably see where things are so far. And I do have one to add to the scan today. And I also have I want to answer some of the questions that folks had as well. So let's go ahead and jump into it. Let's first take a look at the market bias, and this is updated as of today. It ticked down slightly again today. It still isn't really in danger territory yet, but it is continuing to move lower. So we'll see what happens. Interestingly, the CPI number came in higher, as I said yesterday it probably would. Let me actually look at that. So CPI, yeah, it has changed. So you can see it's 2.6 is what it came in at. And now if we move the 12-month moving average over to that one, so you can see this is the one that actually happened today. And I said that because there was a small one that was falling off, that it likely would go up, and it did. Went from 2.4 to 2.6, but 2.6 was expected. Interestingly, it started off, the expectation was 2.4 over the weekend, and then it went to 2.5, and then it went to 2.6. So even though it came in higher, it still came in as expected. So the market reaction actually is pretty stable. So what that's telling me is that the number one, the market kind of knows what this 12-month moving average means, as the Fed does. So they don't think that it's going to have any effect on what the Fed does. The Fed will continue to cut. So I think the market actually still hung in there today. We'll look at that in a second. We still have options expiration to get through on Friday, which a lot of times carries over into the first couple of days of next week. And the worst week of the month is up until the 19th, which is next Tuesday. So we're not out of the woods yet, but we did dodge a bullet, perhaps, from the market reaction. So let's take a look at that. First, I'll look on the homepage. And for those that are interested, this is my website, breakpointtrading.net. You can get to the YouTube channel right from here. There's also a weekly newsletter that I put out every weekend, and you can click on that little box right there to get that. And that's where all of this right here comes from. It's on the homepage. If we look at the S&P, you can see right there, it's just sort of hanging in there. It didn't come down. It went up slightly, not by a lot, but just by a little bit. Actually, it looks like if it ends like this, it's going to have another spinning top. So that could, again, be indecision. So we still have the potential of pulling back before options expiration. There still could be some weakness, but it actually hung in there today, better than I thought it would with the CPI going up. And the NASDAQ, also same thing. It looks very similar, actually. So it's also sitting there with kind of a spinning top. Don't know how it's going to end today, so keep an eye on that. I'll talk about that tomorrow, however it ends. So that actually doesn't look too bad. The other thing that I want to look at is on the charts page, we'll take a look at commodities. Again, I think commodities actually helped CPI a little bit. Bring this back in a little. So this was the month that it was reported on right here. And you can see during last month, most of the commodities were going lower. They're starting to tick up a little bit, except for copper. Copper's going down, and oil and gas is starting to roll over as well. So they're going down. If you look at the little dots right there, that's the actual number. The lines is a 5-day moving average, so it lags the actual number a little bit. But right now, actually, it doesn't look too bad. So next month, CPI probably will be flat, or if this continues, maybe even a little bit down. So that's all going to be positive. I think the market's going to like it. I think if we get through the next 5 days, then we're probably off to the races towards the end of the year. So end of year rally coming up. So let me take a look at a couple of stocks that people had questions about. One was ICE. Oops. ICE. So here's ICE. Looks like ICE reported on the 31st, probably missed their number, and pulled back, and it's sitting right here, consolidating at the lows right now. So according to consolidation theory, whenever a stock consolidates, you can take the distance from where it had been. So in this case, it's right about 166, let's call it 167. And look at the middle of the consolidation, which is at about 157. So that's about $10. So consolidation theory says it once it breaks out of this to the downside, it will move another $10. So that's down to 147, which is right down around here, and probably right at the rising 200-day moving average. So somewhere right around 145 to 148, somewhere in that area is the likely target. It's still in the cloud, but the moving average lines have all crossed over. So that's what it looks like for ICE. There's the consolidations right in the cloud. So probably coming down to the 200-day, which is at about 145 right now, if it breaks down. And I think from the looks of things, that might happen. All right, so the next one is I'm going to look at IWM. Somebody asked that if the market pulls back, does that mean that the small and mid caps will pull back as well? I think everything will, but yeah, this is the one. This is the one that had the biggest run after the election, and also after the Fed cut back in September. It really started moving up, and the Fed cut again, and all of this helps small caps. Now the 10-year is just sort of, it went up and is just sort of hanging out. I'll look at that in a minute too. But Russell 2000 is sitting right there. Like everything else, it's sort of rolling over from the top that it made, but it hasn't really broken out below this consolidation. So again, if everything hangs in there in that consolidation area, if we look at consolidation theory, 225 is where it broke out right there. That's the gap up. The middle of this is at about, let's call it 235. So 10 points. So this could go up to 245, 250, somewhere around in that neighborhood if it breaks out to the upside. So that's small and mid cap. So I think, if the market continues to go lower into Friday with options expiration, I think there are going to be opportunities, because I think we're probably getting ready to have our end of year run here very soon. The other one I want to look at is Kava. Kava had a great earnings report. For those that don't know, Kava is a restaurant that has had incredible growth. You can see what it's done for the whole year. It actually was, if we go to the charts page on the website and look at right here, consumer discretionary, you can see Kava is in the top 3 of its sector, and it has been in the top 3. You can see it. If it has an asterisk, it's brand new for this week. Kava does not. So it's been in the top 3 for quite a few weeks running. It hasn't really made it to the top 10 down here, but it has been in the top 3 for quite a while. So Kava has been a really strong stock. They had great earnings. So it broke out. It now has a black candle. So as I've mentioned before, black candles mean that it opens higher. It's selling off, and actually selling off all day long. So the further this comes down, the less likely it looks like it might reverse. It's actually perhaps going to close the gap. So we'll see what this looks like at the end of the day. I'll look at it again tomorrow. But if it closes the gap, it's actually going to be a red candle. So if it gets down to the close from yesterday or below the close from yesterday, which is down here. Actually, I'll tell you exactly where it is. Close from yesterday was 145.03. Let's call it 145. And right now it's at 146.92. So about $2. So if it goes down about $2 more, it's going to be a red candle instead of a black candle. So is that a reversal? Who knows? It looks like a lot of profit taking right in there when it hit that high right there. But for those holding Kava, probably a lot of long-term holders. So this hopefully is just noise, but we'll take a look at that again tomorrow and see what that's done. Okay, the other question was on DXY. And before I go over and show you that, I want to make sure to cover real quick that the disclaimer that I am not a financial advisor. This is for educational purposes only, and it's not meant to suggest or recommend any stocks to buy or sell or when to buy or sell them. If you do decide to engage with a financial advisor, I recommend you go to this website and check them out, make sure that they're okay. I want to make sure to get that in. So DXY, interestingly, is it's a symbol for the dollar. And I had to do a little research because it's not in stock charts. So DXY, that symbol, which is strange because there are a lot of different symbols in stock charts, but that one is not. So what I did was I put it in my Thinkorswim platform, and it is in Thinkorswim as dollar DXY. This is the dollar index. It's the spot price for the dollar. And you can clearly see that it's screaming higher. Ever since back here on the beginning of October, it has just been moving higher and higher. There's another symbol that we can look at for the dollar, but this is basically what it looks like. It's just continuing to go higher. What this means is, and this is usually not good for gold, it usually means that we are not worried about inflation any longer, and we shouldn't be. Inflation's coming down. It'll be below 2% in the next few months. And the dollar is confirming that. So the dollar is continuing to go higher and it's getting stronger. Now, that certainly doesn't help American multinational companies with a strong dollar. A weak dollar helps them, but it certainly helps that our dollar is not being debased by inflation so much anymore. So that's what DXY looks like. This, by the way, is also my Thinkorswim, one of my Thinkorswim panels. And you can see the green arrow here is the pullback, like I've been talking about with the daily scan, the pullback, and then the move above the 21-day moving average. So I can see that also in Thinkorswim. It actually happened back here even earlier. The next panel down here is John Carter's Squeeze. This is the Squeeze Pro. So he talks about this in his book, Mastering the Trade. And you can barely see the little dots down below, but if it's a red dot, especially a yellow dot, that means that it's squeezing, means it's moving sideways in a little channel, like a spring, loaded spring getting ready to explode. And once it changes, so it went from red to black, and then the next one after black, which was only black for one day, is green, which means this means the squeeze is fired when these bars start to move up. So the squeeze actually fired right here, pretty much exactly where my signal is, where it goes above the 21 day. So the squeeze fired, and then it moved up dramatically. So that's pretty nice. We can also look at my daily scan charts right over here, and I'll just go through them using this platform. So here's DocuSign. DocuSign moved up nicely today and then pulled back. It's near the lows today. Google did the same thing. It's starting to roll over. So as I mentioned before, I'd actually like to see some of these pull back and then move higher so we can move our stops up. The dashed blue line right here is where the stop is, by the way. So keep an eye on that. There's Oracle. Oracle is just moving sideways right now. Powell coming down, like actually coming down quite a bit today. So if this one doesn't reverse and start going back up, then it's going to get stopped out right at the 21-day moving average. So we'll see how that one does. Actually down $26 today. Raytheon rolling over a little, hanging in there. Sentinel, actually again, just like DocuSign, had a nice morning rally and then it's pulling back. In fact, a lot of things seem like they're pulling back at the end of the day today. So that might be an indication of moving into options expiration. VRT, Vertiv, same thing, moved up and then started pulling back. And then the last one, which is getting ready to stop out, the stop is at $44. So this one is going to probably stop out today, but that's where it is right now. If we look at these on the chart, and Intel is the one that I just added, by the way. And let me talk about that. So I added Intel. If we look at the chart, there's what it looks like. Added Intel right there at 24.75. Put the stop down here at the 50-day moving average. So giving it quite a bit of room to move down. But Intel is a really interesting one. It's kind of moved in this 22 to 26 area for quite a while. There is talk that it may get acquired. This is a company that's not going to go out of business, and it's pretty much at the lows and it's moving up from the lows. So this is not necessarily one of the momentum stocks that I like to trade, but it's one that I think is really interesting, and I actually like to be in it if it does take off like that. So right now it's at 24.92, bought it at 24.75, so it's up slightly, and you can see it right here, 9% if it does go down and get stopped out at 22.50. But that's okay. I actually want to give it some room to move. Okay, the last question that came up that I want to talk about is how do I use this for options? And one question was, do I use stops for options and do I use the stock price or do I use the option price? Options are very volatile, so they can move quite a bit, even within a few minutes, within a day, they can move a lot. So it's very difficult to actually set an automated stop with options, but you can certainly set a mental stop. And I like to set about 50% loss in an option, and I'm usually out. And I'd like to have about a 70% gain on the upside, 50 to 70, depends on what it looks like. But there is a way that I can find stocks or candidates for options, and that's a scan that I created called Riding the Wave. And I'll just talk about how this is put together, and then I'll show you where you can find it. I'll actually run this. I don't know what it's going to return, but looks like the market's pulling back here at the end of the day. So I'm looking for stocks that have volume more than 100,000, and their average over 21 days is over 100. They are optionable. They are from these lists of the IBD 50, relative outperformers, combined top 10 lists, the stocks that have weekly options, and the Magnificent Seven. Those are the ones that I'm scanning for. And then I have two scans in here. One's bullish, one's bearish. And in stock charts, if you put two slashes in front of the line, then that basically ignores that line. That's what it tells this little script, just to ignore that line. I also want to have close greater than $25. Okay, so there's a bullish and a bearish. So the bullish, I'll talk about the bullish, and the bearish will just be the opposite. So I'm looking for something that has a daily low below the lower Bollinger Band. The Bollinger Band basically tells you the range that a stock is moving in. This is a fairly tight one. This is what John Carter uses, by the way, for his squeeze. So when you see on his squeeze a red, a black, and a yellow, that's just squeezing. That's just making the Bollinger Bands narrower and narrower. So the more in the very narrow ones, this would be the mid squeeze for him. So it would be the red. Black is the wider squeeze, red is the mid squeeze, and yellow is the tightest squeeze. So this would be in the middle range for him. So 13 for the Bollinger Band. Yesterday's low was below the Bollinger Band, or 2 days ago was below, or 3 days ago was below. So any of these can be true. And then finally, it needs today to be closing above the 5-day exponential moving average. So that says it's been at an extreme, or at least within the last 3 days, it has been at an extreme, and it's starting to move up because it's crossed the 5-day. So these are going to be stocks that have sold off, some perhaps dramatically, and are just now beginning to move up. The bearish is the opposite. So things that are above the Bollinger Band, and now it's moving below the 5-day exponential moving average. So let's run this and see what we get. If I run the scan, I have no idea what it's going to return. 6 stocks. Datadog, so this is the bullish one. Keep that in mind. Occidental, UPS, Verizon. Let's look at Verizon. So here's Verizon, and again, you can see a lot of stocks look like this. They had a really good first half of the day, and they're starting to pull back in the second half of the day. But if I look at my Riding the Wave view, so anything in this pink area is that 13 Bollinger Band. So you can see right there, it went below it. So it is at an extreme to the downside. And then right now it's above the 5-day exponential moving average. Now, by the end of the day, this could be below the 5 and it wouldn't make the scan. So that's why I like to run these a lot of times right near the end of the day, around 3:30. You can also see the red dash lines. That's the Keltner channel. I talked about that last couple of days. Keltner channel is basically the average true range. And in this case, this is 2.5 times the average range that this moves. That can give you a sense roughly for where this potentially could go to. So if this was an upside, this is a bullish scan. So if we got in right now, it's at, call it 41, then it potentially could go up here to about 43. And it could go higher than that, but that would be an extreme if it gets that high. So it just gives you a sense for how far it potentially could move. Let's look at Datadog just for fun. Datadog just reported this week it's moving up. And if I look at the riding the wave view, this is a very tight channel. So this is the John Carter squeeze right here. If we actually look at the John Carter squeeze, we can see the bright green. That is definitely a squeeze. So this one, it looks like it's getting ready to explode, or the squeeze is getting ready to fire. It has not fired yet, but if this does fire, it could move quite a bit, quite a distance. So this is an interesting one. Again, the Keltner channel is way up here, probably at about 140, 145. So it's got about $10. It could potentially move. Huge volume on it too. So that one actually looks very interesting. What else? Dollar Tree, Frontier Communications. Let's take a look. That one's just that one. That is a huge squeeze right there. Just because it's going sideways, it hasn't really moved much. I think this one is a buyout candidate. I think that's why it looks like that. And what else? UPS. Let's look at Occidental just for fun. Occidental right there. That's a hammer. That is a bullish signal. Earnings were earlier this week. So earnings are already passed. So this one actually might be getting ready. There's the squeeze. So you can see if it's bright green, then it's in a squeeze. So this one too might be getting ready to fire out of the squeeze. And if we look at the riding the wave, right today it went below the Bollinger Band and now it's above the 5-day moving average. So this one could explode out of there. It could go as high as 54 and could even get to the weekly Bollinger Band up here. That's what the gray area is. So the pink area is the daily Bollinger Band. The gray area is the weekly. So potentially could get all the way to 57 from there. So it's at about 51 right now. So that's how I use that. That's just one way that you can use stock charts and technical analysis to find candidates to do options with. I'm going to just basically show you how I do this on the bearish side. Actually, that was the bearish side. No, that was the bullish side. So I took the slashes off on that one, and I'm going to put slashes on up here. And we'll run it again for the bearish and see what happens. Now you can see there's a lot more on the bearish side. Interesting Upstart Holdings, one that exploded that we had on our watch list, and now it's starting to come down. And if we look at that on the riding the wave view, you can see clearly it was at an extreme with that big run up that it had. And it's actually maybe going to come back above the 5-day, but if the market keeps going down, it might go below the 5-day. So that one potentially could be a bearish play. What else we have here? This one here, here's an AI stock. So this has kind of been going sideways. If we look at it on the riding the wave, that's what it looks like. So you can see 2 days ago, it went above the Bollinger Band. So I'm looking for something in the last 3 or 4 days. And 2 days ago, it was above, and right now it's sitting right on the 5-day exponential moving average. So this might be one that is ready to move down, and it might go down to 23. 27 to 23, somewhere in this range down here. So anyway, that's how I use that. You can find that scan on the options page right at the top, right in the wave scan. It's a PDF file. When you open that, it explains to you what the scan does. Um, and then you basically can just copy and paste it. You just copy that scan just like I wrote it and paste it right into your own stock charts. Now you do need a stock charts account in order to do this, but you can copy and paste it. You can modify it. Anything in yellow, you need to add your own chart lists. So these are the ones that I use, but you need to delete those and put your own in instead. But that's how to do it, and I give it to you right there, right on the charts page. I mean, on the options page, and on the chart lists page for those that are interested in stock charts, you can click this right here and take a look at all the stock chart subscriptions. They often will offer specials, and they probably will do one for Black Friday. So keep an eye open for that. But that's where you can find it on the website. All right, so that's it for today. A little bit early for the market, but just out of curiosity, let's see what it's doing before I go. There's actually, that's Bitcoin. Bitcoin was making a huge run. It's at 90,000. It was up to about 93,000. So it's making its run to 100. It could get there by the end of the week. Here's, you know what, a better way to actually do this? If I go back to the charts page on the website, and I right down here is the 10-minute chart with aggressive sectors and defensive sectors. So this is a 10-minute chart. So what you can see is this is this week, anything to the right of this vertical blue line. This is last week with the election and the big run up. We're basically just treading water right now. We're just moving sideways. Technology is a little bit up. Financials are flat. Discretionary is flat. Communication services is the big winner. Industrials are a little bit down. And then if we look at the defensive sectors in the same way, again, the market's pretty much flat right now. It's pulling back at the end of the day, which is what I looked like everything was doing. Healthcare is down. Staples is flat. Energy is a big winner. So energy and communication services are the big winners for the week so far. Utilities is down and materials definitely down. Materials is where gold is. So gold is not having a great day, or a great week, I should say. If we go to one other interesting thing that I noticed when I was putting this together, here's gold. Again, another down day for gold. Has not given a medium-term down signal, but it's heading that way. So that's what gold looks like. And the other one is software. Take a look at software right here, IGV. You can see software is up here. You can barely see it, but it's bullish across all three. Look at software. Software is just screaming higher, and just like everything else, had a great morning and now it's pulling back. So this is a shooting star candle. It is a bearish reversal candle if there is follow through. So just because we have this doesn't mean the market's going down, but if there's follow through the next day, and oftentimes there is with a candle like that, whenever I see a candle like that, if I'm in something, I will just get out. So we'll see what happens with the market. All right, so that's it for today. Thanks everyone for watching. Please give me some likes and subscribe so that I can continue to do these. If you think they're valuable, let me know if there's anything you want me to look at or discuss. Be happy to do that. And watch out for options expiration on Friday. And good luck trading. Thanks, everyone.